an accountant is a keeping of the basic records, so that an accountant can move in and get your accounts done. So once we come and we can easily track all your sales and all the expenses, all your assets, all your liabilities, we can easily use these same guidelines in preparing to you financial statements, right? All right. So I think my concern should rather be on the financial statements. So once your records are ready, an accountant's main focus is to give you financial statements. Now, when accountants talk about financial statements, we are talking about a combination of 5 items. The first one is what we call the statement of financial position. We used to call it the balance sheet. The balance sheet is what the bank looks on to give you a loan. The balance sheet is what even a supplier who is serious in business will look on to give you a supplier's credit. So your balance sheet is key. Again, record keeping is prime. Your balance sheet is just a relationship between your assets, the things the resources you control, against your liability and your capital, right? Because if you invest, let's say, money in a business, which is your capital, you will use it by all means on an asset. You start a business with, let's say, 1,000. That 10,000, you bought, let's say, a table. So you see, anytime you have a capital, it goes in buying an asset. So, or if it was not even a capital, and you want to pick a bank loan to start a business, or you brought a capital, but it was not enough, so you went for a bank loan. So you can start a business with 2 sources of revenue or income. It's either your own money you are starting a business with, so you wanted to buy, let's say, a bus for a business. The bus is 80,000 Ghana. But you yourself, you have saved 20,000. So that is your capital. So you needed about 60,000 to buy the 80,000 car. So you went for a bank loan. So at this point, the loan is a liability, right? And then your capital is 20. The two together is what gave you a car. And the car is the asset. So in the accounting world, we always say your assets will be equal to your capital and a liability. So assuming that you had 80,000 in savings and you bought a car with that amount, at this point it was a capital 80 that bought a car. So liability is what? 0. Again, asset is equal to capital and liability. Because at this point the asset is 80, your capital is 80, liability is 0. So that equation will not disappear. And so you need to keep a track. So at every point in time, we prepare what we call a balance sheet to allow us to understand what assets you have and to test whether you can pick on additional loans. Your balance sheet is what we need to see whether you have enough, let's say, assets in order to be credible for a supplier's credit or even the limit we should give you. And your assets will grow if your business is profitable. When people begin to say you are becoming rich, you are rich. When yourself you are saying you are rich, what it means is that your assets are growing. It means when you make the profit, you are now using the profit to buy a land, to buy a car, to build an office, let's say, complex. So that kind of a site is what people see and say you are rich. So investing in assets is key, but you must also invest in it wisely. Because sometimes you can invest in some assets and you become what we call illiquid. You have assets, but you don't have a cash. And that's what is happening to Ghana. We have all the gold and minerals, but when it comes to the money, we don't have it. Because all our assets are in resources that we are here to extract. And so you must also learn to invest and have a balance. Again, your accountant can assist you in taking that decision. So an example of a balance sheet is this. So where we show the assets and we show the liability. So you have it already in there. The other financial statement we have is what we used to call the profit and loss and loss account, or now called the income statement, which is a statement that is showing your performance. So whether your business is making profits or losses will come from this. So we always want to see a case where the bottom line is a profit, and not just any profit, but a profit that shows that you are growing. If I sold this, I bought this at let's say 5, and I sold it at 5.5, I've made a profit of 0.5. But it's not the same as I bought it at 5 and I sold it at 8. So as a businessman, you must learn about how do I maximize the profit. So here it is when we match our revenue against our expenses. And the expense is not only how much you bought the item, but all the other expenses for the business. Right? So how much I bought is 5. How much I sold is 8. So giving me a gross profit of 3. But I must pay salaries. I must pay electricity. I must pay AMA. I must pay X. I must pay Y. I must take all that out before I say I've made a profit or a loss. And so once you begin to do these things, you will now know how best to operate your business to reduce the cost. So for some of you, the number of people who are working for you are too many for the kind of revenue you are making. So you must downsize. When you don't prepare these things, you will not know. Right? But some of you, the staff you have are so much that your revenue must even double because you must keep them at all costs. Whose son are you going to sack? 4 of them are the background of your wife. 2 are from your own background. So what we need to do is to have a meeting and say, how do we increase the revenue? So I maintain everyone here. So it is key. So record keep. So you yourself, you can do it on your own. So most of you here in the open market, all you do is, I don't want to make a ton of 10 and I'm a ton of 5 into my profit. No. You've forgotten that they are all the taxi cost, rent. It is key. And so you may explain why your business is not growing. And you are busily praying in tongues and using anointing oil and going to pray. With a fault is not a demon, but because you're not taking the trouble to look at the costs you are incurring and how to manage it or how to increase revenue. Or the margins you put on the item are too small. So though you are selling or you are making too small an income to take care of all the other indirect, let's say costs. Some of you are even making the income, but you are using air conditioning every day. And today, ECG prices are up there. So it means let's shut down the air conditioning and use a fan. So we use fan from morning to about 11. When the weather is hot, we put on the aircon to about 5. When the weather changes in the evening, we go back to a fan. Because you may realize that if you now do all the costs, your major cost component may be the air condition. The ECG you are paying is too high. So we find ways around it. So that's what we have as an income statement. The third one is what we call the statement of changes in equity, which is a statement that tells you how your profit is changing, how your capital is changing. You want your capital to be growing, right? And so accountant, when we pay your account, and the change from here will basically come from how much profit you are making and how much you are taking out of the business. Agree with me? So you started business with 10,000. If you made a profit of 1,000, then your equity would have changed by what? 1,000. In January, you started with 10,000. December, you made a profit of 1,000. So you see, you have increased your capital by 1,000. But then, within the same January to March, you were feeding your friends for free. When we take it out, it's 2,000. So your profit is now what? 9. Hello? It's 9. Or you called that your child's school fees has not been paid, so we should go and pay it for you. That is you taking money of the business. So again, once you begin to see the effect on you, you are mindful what demands you make on the business if the demand is for your private benefit and not for the growth of the business. So stop insulting the people who are working for you. You are chopping it yourself. No demon is chopping your money. You are your own demon. So when you are praying, God, I bind demon. You are binding yourself. So these things, you need to understand how it affects the business. Any money you take out of business, you have taken out of your capital. Any money, whether it's written down or not. Any money, a peswa for your business is what it means that you are chopping your own capital. So if you want your capital to grow, give yourself a salary and live with it. And even if you take the money out, it means that the business has loaned you the money. Look for the money and put the money back. So you only take out of the business if you are taking out of the profit. You made a profit of 100,000. You are telling myself, Master, a laborer is worthy of his wage. And so once I made 100,000 Ghana cedi as profit, I'm taking 20,000. You are right. So then that means you are not growing the business by the whole 100,000. You are growing by 80,000. It's still what? A change. So once you do the accounts, you yourself can now give yourself. But there are times when you are also taking that 20,000. But what you are doing is that you are taking off the business liquidity. Because this 100,000 profit that you have made, you have debtors, people who owe you about 60,000. So until they paid you that money is not sitting anywhere. So God has blessed you. You take the 20,000 in cash. So you have reduced your cash by 20. Means that now you're not going to run a business on only 20,000, let's say, cash, because the 60,000 is in the hands of your customers. So again, it means that you must now set in motion the thing to say, let's go out there and collect all the money from our customers. This is why the microfinance businesses are collapsing in Ghana. We go for the loans and we don't pay. Yet they will show a profit and loss and give themselves dividend. The dividend they are giving themselves are the monies of those of us who just entered, who just said we wanted to invest our money. So once you are holding their money in the market, in your shop, and you have not paid, they've made a profit, but the profits are with you. So if there's a fire outbreak and your business cannot pay them, and they say you are bad debt, then it means the microfinance cannot get the money back to give to whoever brought money in there. In no time, the companies go down. So please manage your finances very well, and life will be easy. There's also what we call a cash flow. The cash flow, apart from being a financial statement, is also a management tool that all of you must learn to live with. Your business must grow to a point. Please, you can stop me anytime, right? If you don't understand me. Your business must learn to prepare a quarterly cash flow to guide you. Your cash flow is nothing but as simple as, I have 1,000 with me now. How do I want to spend the 1,000? That is the meaning of saying a cash flow. So all of you here should be preparing a weekly cash flow. Between now and Saturday, how much money will come to you as a wife, as a husband, as a business owner? Sit down on Sunday evenings and ask yourself, between Monday and Saturday, I will get so between Monday and Saturday, Madam, what's the name, please? Cecilia, how much money do you think the Lord will bless you with? Which will come? How much money do you think the Lord within this week is going to be blessed with in terms of, let's say, cash? Good. So Cecilia says her inflows for the week is 34,000. The danger Cecilia put herself in is when Cecilia does not realize that she must prepare a cash flow for this income. Or else the Lord will bless her with 34,000. On Sunday evening, she will say,